Just Kitchen Holdings Corp.s CVE, JK, price to sales, or P/S, ratio of 0.6x might make it look like a buy right now compared to the hospitality industry in Canada, where around half of the companies have P/S ratios above 1.8x and even P/S above 4x are quite common. However, the P/S might be low for a reason and it requires further investigation to determine if it's justified. See our latest analysis for Just Kitchen Holdings for example. Consider that Just Kitchen Holdings' financial performance has been poor lately as its revenue has been in decline. Perhaps the market believes the recent revenue performance isn't good enough to keep up the industry, causing the P/S ratio to suffer. However, if this doesn't eventuate, then existing shareholders may be feeling optimistic about the future direction of the share price. We don't have analyst forecasts, but you can see how recent trends are setting up the company for the future by checking out our free report on Just Kitchen Holdings' earnings, revenue and cash flow. The only time you'd be truly comfortable seeing a P/S as low as Just Kitchen Holdings is when the company's growth is on track to lag the industry. In reviewing the last year of financials, we were disheartened to see the company's revenues fell to the tune of 27%. In spite of this, the company still managed to deliver immense revenue growth over the last 3 years. Therefore, it's fair to say the revenue growth recently has been superb for the company, but investors will want to ask why it is now in decline. Comparing the recent medium-term revenue trends against the industry's one-year growth forecast of 156% shows it's noticeably less attractive. With this information, we can see why Just Kitchen Holdings is trading at a P/S lower than the industry. It seems most investors are expecting to see the recent limited growth rates continue into the future and are only willing to pay a reduced amount for the stock. Generally, our preference is to limit the use of the price-to-sales ratio to establishing what the market thinks about the overall health of a company. As we suspected, our examination of Just Kitchen Holdings revealed its 3-year revenue trends are contributing to its low P/S, given they look worse than current industry expectations. Right now shareholders are accepting the low P/S as they concede future revenue probably won't provide any pleasant surprises. Unless the recent medium-term conditions improve, they will continue to form a barrier for the share price around these levels. Don't forget that there may be other risks. For instance, we've identified 4 warning signs for Just Kitchen Holdings, 3 are significant, you should be aware of. If you're unsure about the strength of Just Kitchen Holdings business, why not explore our interactive list of stocks with solid business fundamentals for some other companies you may have missed?